The crypto market's as unpredictable as your girlfriend's mood. When it's bullish, it's like when she confidently says, "I'm so pretty," full of excitement and optimism. But when it's bearish, it's like those moments when she feels not so cute, reflecting a pessimistic outlook. With that in mind, today's lesson is structured in 3 parts. 1. Bullish. 2. Bearish. 3. What to do when you're facing up with both market status. Now, let's dive in and explore how these market moods can shape your next move. Starting with Part 1. What is bullish? With seed learning. The term bullish comes from the bull's attack by charging up. When we say the market is bullish, we're talking about a strong uptrend where prices are rising and expecting to rise for a long time. You can imagine fun situations like your girlfriend says, "I'm so pretty." It's all optimistic. At that time, investors feel confident about the future of their investment and believe prices will keep climbing. Now, let's take a look at a real example to understand deeply. Back to 2020 to 2021, Bitcoin experienced a historic rise of around $10,000 in mid-2020 to over $60,000 in early 2021, as retail and institutional investors embraced the cryptocurrency. That's a case study of the bullish market called Bitcoin Bull Run. What's about bearish? Bearish, on the other hand, refers to a situation in the financial market when the prices of most assets fall steadily. The main reason the bear image is used to talk about a down market is because of the way it attacks, which resembles the movement of a bear. The bear often launches powerful blows from the top down when attacking. Imagine moments when your girlfriend says, "I am so ugly, I am not cute." All of this reflects a pessimistic outlook. In this phase, investors may start feeling uncertain or cautious, leading many to sell their assets to lock in profits or minimize risks. This wave of selling builds momentum, driving prices down even further and creating an opportunity for those looking to buy at lower prices. But it's all about staying calm and making thoughtful decisions. So here is a real example of a bearish market. The Ethereum bear market in 2022 was marked by significant losses and sharp price declines. From an all-time high of nearly $4,800 in 2021, it fell below $1,200 during some of the market's most volatile periods. In both bullish and bearish markets, a clear strategy and managing risk are essential for you. Here are some advices when you have to face both situations. When facing a bullish, when prices are rising, it's great to jump in, but remember that you have to invest only what you can afford to lose, as the market can shift unexpectedly. Even if you're new, it might be wise to invest a little and consider gradually increasing your investment as you get more comfortable. The ideal action is to take advantage of rising prices by buying stocks early, if possible, and then selling them when they have reached their peak. In a bearish market, however, prices keep dropping, and there is a down move, which increases the chance of losing money. You cannot see when the decline will stop. In these conditions, what should you do? Many investors find more profit opportunities through safe options such as fixed income investments. So, that's the end of today's lesson. Are you feeling more bullish or bearish after learning about these market moods? Drop your thoughts in the comments. Don't forget to hit like and subscribe for Seed Combinator.